But you know better. At Schwab, you get commission-free trades and quality trade executions from the only firm that offers a satisfaction guarantee. Schwab, the better place for traders.
This is Trader Talk.
Hello, everybody, and welcome to Schwab Live Daily. Our topic this morning is our daily edition of Trader Talk at today's market. My name is Lee Bowl, and I'm a trading services manager with Charles Schwab out here in California. Our usual host, Kevin Horner, is taking a couple days off, so we have a special guest, regional investment strategist and fellow market technician from the Big Apple, Mike Briscoff. How you doing, Mike?
Hey, doing very well, Lee. How are you?
Very good. We'll see how the market's doing in just a second, but let's get right to it. We want to hear from you, so send in your questions in the Q&A functionality underneath the presentation window. Your questions are private and will only be seen by Mike and myself. We'll keep our eye on them to make it as interactive as possible, but we can't always get to all questions due to the number of people on these sessions. We also have our usual delightful written disclosures. We're required to show everything Mike and I talk about should be considered as educational and informational in nature only. Nothing's a recommendation. Any expressions of opinion that either of us make could change at any time based on market conditions. We look at a lot of charts, but we do not recommend the use of technical analysis by any means as your sole method of investment research. I mentioned short selling as an advanced trading strategy has to be done in a margin account. We look at ETFs and ETNs. If you're going to trade those products, read a prospectus. And with that, we'll put up the heat map. Not a lot of news this morning. We'll go over it, and Mike, feel free to chime in if I miss anything.
Thank you, Lee.
All righty. So overseas, Chinese Customs Office announced that the imports of poultry from a Tyson food facility in Arkansas will be suspended due to coronavirus fears. And we'll take a look at Tyson stock here in a little later. The People's Bank of China left its 1-year and 5-year loan rates just right where they are. So their 1-year loan rate is 3.85, 5-year is 4.65. That was as is expected. In Italy, Prime Minister Giuseppe Conte said his government is considering a sales tax cut due to the weak consumption that has been occurring over there since the lockdown measures. In a similar vein, the British Chancellor, the Exchequer, is expected to announce an emergency value-added tax cut for the United Kingdom, so trying to spur a little bit of spending over there. In Asia, mixed. Japan was down 0.2%. Hong Kong was down 0.5%. In Hong Kong, Secretary of State Pompeo did say that going forward, they're going to treat Hong Kong as just another Chinese city, so they're going to pull some of the special considerations that they used to give Hong Kong for what it's worth there. China was down 0.1%. India was up 0.5%. Regarding the virus, which the market sometimes cares about and sometimes doesn't. Anyway, the news today is Germany just discovered a pretty large cluster of cases related to bunkhouses occupied by meatpacking workers. Kind of similar to what we're seeing in the U.S. Midwest in some of the meat packing plants. Also, a few nations like New Zealand basically have declared absolute victory over the COVID virus. But Germany's experience is making people think that you got to keep looking pretty carefully and just beat it down every place it comes up. We also know, of course, that we've been having a surge in case counts in the United States. 30,000 cases a day on Friday and Saturday. Obviously, some of that's due to more and better testing. The main states where we're getting this outbreak, unfortunately, is out here in California, also Texas, Florida, Arizona, and in the Carolinas. The only news today will be the existing home sales reports, which is probably coming out right now. And that's all I got. So let's go on to stocks in the news. All right. Um, Here is a question for you, though. It's just a little trivia. What of the big cap stocks in the Russell 1000? Remember, the World Health Organization said we're in a pandemic on March 11th. So which stock has done the best? Anybody know? Just send in your comments and I'll give you the answer a little later.
A real
All right.
teaser for you, Lee. Good job.
Yes, yes. We have fun here. So what we're going to do here is let's just put up some stocks in the news and we'll take a look at the charts. So let's start with little bouts here in Virgin Galactic. So looks range bound to me. I'll ask Mike here in a second. I'll just give you the news though. They did sign a deal with NASA to develop a recruitment and training program for private astronauts who want to visit the International Space Station. Looks to me like this is pretty range bound though. You could trade it like a range, so you got a pretty good range, a 6-point range. Moving averages aren't going to do you a lot of good in a range. You probably want to use like oscillators. But your thoughts on this chart, Mike?
Yeah, Lee, I was looking at that news earlier this morning and I was thinking about that stock. You know, the one thing I do agree with you that it's been very range bound, and this thing has been kind of a rocket ship since it IPO'd, you know, late last year. One of the things I would say to you, you know, if it were to maybe, you know, you might get a little bit of short covering in this particular, it's up 14% on this news. This was one of these stocks that was extremely hard to short over the last couple of months. So I would watch for a breakout potentially to the upside, certainly on strong volume. That would be my key for this stock. But yeah, this has definitely been a range bound stock the last couple of months. But I'm looking at the volume right now. We're almost hitting the volume that we've been hitting the better part of the last, you know, probably 5 to 6 weeks. And we're still early in the morning right now. So hope
Right.
we'll keep an eye on that as the day wears on. But yeah, interesting stock today, definitely for sure.
Okie dokie. Next one, Walmart.
I said the same thing to myself, Lee.
Yeah, I mean, are we breaking? You know, I suppose you could draw this. I didn't want to do it like that. Let's see.
It's been a steady downtrend, just like you're drawing right there. Steady
Yeah,
downtrend of lower highs. We had that one extreme day where it popped up, continuing to, you know, slightly hit lower lows, not on a daily basis, but still hitting some lower lows in this little bit of a downward trend. Friday was a good day though, Lee. Look at that volume on Friday. Nice up day. You're trying to push above that downward trend line today, so we'll have to see how the day wears on that one.
yeah. So sometimes a trend line break can be a little bit of a heads up. News here was that UBS upgraded them to buy. They cited greater productivity and good growth in their e-commerce platform. Next stock I'm going to show you, we've been talking about this one for a while. It showed up a lot of our screens. Let's just see. Yeah, so Sherwin-Williams. So they increased their guidance for the current quarters, saying that people staying at home have nothing else to do except paint their houses, apparently. But so the news is good. Maybe it's a sell the news. It looks like a bearish engulfing candle right now, which is not the greatest thing. Let's see where the support is in here. I'd say somewhere in here, Mike. What do you think? 550?
I think the support's there at 550. I think more from the quote unquote air parenthesis good news that it opened up bearish engulfing candle today. Look at that resistance line up top right above that area that you just drew.
Yeah.
Yeah, I mean that's
Yeah.
more concerning, and you know, going with your sentiment of sell the news on something like that. Yeah, you know, They sell paint. They're not going to change the world, but certainly good for them that people are taking advantage of the pandemic to increase the value of their homes and want their houses to look a little bit better. But that's a pretty tough resistance area up there on that stock.
Yeah, so maybe it's been doing well. Let's just see if there's a moving average around here that means anything. Well, I guess you could say that at the moment we haven't violated the 20, but as we go into a range, you can see once you go into a range, these moving averages kind of lose their. Notice how they work when they're sloped, and notice how they don't work when they're flat. Teaching moment. So whether it holds the 20 here or not, I don't think that's such a big deal. I think you got to pay attention to horizontal support and resistance in here.
Yeah, listen, it'd be a nice trade on the long side if we were to break out above that.
Yes.
What's that range there, Lee? We're talking from 599 to 550. I'll call it
50
lack of a better
points.
50 points right there. So
Yeah.
you get 650 upside target, but unfortunately, if it breaks down below that on this news,
Yeah.
today, I don't think that's doing it today. But the
It'll be
bearish
down
side of it,
there.
yeah,
Yeah.
you'd be looking right around 500 on the stock. So those would be some interesting levels. See how it does on volume. Volume's relatively low on that, still 70,000 today. So kind of hard to make a decision on a low volume stock, but by the end of the day, let's see how that, maybe they turn this upside down and start pushing it to the plus side on the stock today.
Yeah, but at least we've given you the levels to watch on that one. The airlines are not doing too well today. Let's take a look at American. However, if you like the stock, you are getting a perfect swing trading entry here. Pull back to the 20-day, which has a slope to it. We've had kind of let's see here. Let's do this. So we had kind of decreasing. It's not letting me do that. Hang on. All right, so kind of decreasing volume here in the pullback.
Lee, I think that's good analysis there. When you're talking about a stock that has, I'm using air parentheses, that a little bit of that cup with handle, right? We see that flattening base off the big sell-off there. Then we have that big upside move, and like you just pointed out, it's coming down a little bit, sitting on the 20, but it's been a low volume off of these. I'm calling it recent sell-off of the last week and a half. And again, that does give you an opportunity to get into these. People have been, I see on your show, I see on the shows that I'm on with you, people are always asking us about these airline stocks. Is it time yet? Is it time yet? And I think, as people that build positions, I think those, these would be the ones that you have to start to build a little bit to give yourself some room to be wrong. But the truth is, it's coming down on light volume is a I'll call that a little bit of a breath of fresh air on those for these airline stocks.
Yeah, so the news here is they are seeking $3.5 billion in new financing. They're going to sell $1.5 billion in stock and convertible notes, and another $1.5 billion in senior secured notes. They're also opening up a $500 million credit facility. So you got a little dilution with the convertibles and the stock, but I bet you it's the same thing here with UAL. That had violated the 20, but not by much. I think this one, let's see if it can go back above the 20 if you want to enter. And the news here is they are attempting to sell $5 billion worth of bonds this week. So they're trying to get some cash, to help them through this period. We got a question. You mentioned using a 20-period moving average when day trading. When you're at the 5-minute charts, people tend to use the 20-period exponential as opposed to the simple. Don't ask me why, but that is trading lore. All
And I
right.
think as you're talking about that, Lee, just maybe even in that question, just as a 2-second thought,
Yeah.
people use exponential really for just more current price action, whether we're looking at a daily chart right now. So we give a little more credence, in this case, United Airlines, to what's going on yesterday and today versus giving it equal weighting what happened over 20 days ago. So yeah, I think, using the exponential maybe on those intraday charts when you're really trying to make an intraday move, that might be a little more beneficial. But on these longer term charts, I think the simple one works pretty good there as well.
Yeah, plus just seems on daily charts. Now, I will say that a lot of trading services use the 21-day exponential moving average on daily charts. So not nearly as many people look at that, I don't think, than the 20. But if you are looking for an exponential one, a lot of traders look for pullbacks to like the 21-day exponential on daily charts. Other moving averages that aren't the ones that we look at, just for sake of completion, some people use for shorter term trading the 8 and 13 moving averages. Simple, because they're Fibonacci numbers, 8 and 13. So some people do use the 8 and 13 and they look for crosses on those as a trading system, just to be complete. We don't do that here, but
You've heard such things.
I have heard such things, indeed, indeed. All right, let's take a look at Tyson Foods. We talked about them.
You know what, Lee? You keep getting, before you leave the airlines, you keep getting Boeing questions if you want to take.
Okay, let's take a look at Boeing. You
No,
follow this one pretty closely, so it's kind of looking like the airlines, right?
Pretty much. I mean, the same kind of bottoming pattern. We had made that little base. We're making that little upper right-hand side, pulled back on some lower volume. This one had a little bit lower, little bit more volume than we first saw on. We just looked at United, which had some volume. American had a little bit of volume. So this one, on that sell-off on Friday was a little bit more volume than we had seen previously. But yeah, looks pretty similar to the rest of these airline charts.
Yeah. So again, if you like the stock, you're getting a place to, add a little. You just have to figure, if it's a short-term trade, though, if it violates that, you might want to get out and try again, because if it broke that, it could probably get down to 153, but hopefully it won't, for the sake of the Dow. This has an overweight effect on the Dow because it's one of the higher price stocks in the Dow. Okay, let us look at Tyson Foods. We talked about them. Kind of a sloppy chart, not doing too much. Let's just see if we're anywhere around the 50-day. Well, that's interesting. Pull back to the 50 there, right? Which
gives you a little opportunity to get into these guys, use that 50-day as support. It is in a little bit of a trading range there, quite a wide trading range.
Yeah.
55 to 65 for the better part of the last 2 months.
Yeah.
So that's an interesting little spot there for this stock. Again, I know we're trying to get a handle on, the amount of disease inside these factories. Are the workers comfortable going in? Are they not comfortable going in? Obviously, this has been the story, since the pandemic has really taken hold of the country with these food factories. But a sideways trading range, pushing, you see a little bit of resistance there, Lee, at the top of that range.
Yeah.
And you're stuck right there on the 50. So I can find better trades for my money right now. But yeah, what are you thinking on that one?
Yeah, I would look for now. I would look for a breakout again of either way, and you wouldn't have been wrong trading this breakout because it did, you just it had stopped out for a little bit of a loss, but I'd say the risk to reward right in the middle of the range is not that great. So to your point, Mike, there's probably better charts out there for a quicker trade. Yeah. Let's take a look at DraftKings. This is one of Kevin's favorites, just because he likes to. So, newer issue, you can't really, looks like a little bit of a saucer base up here. News on them, they were initiated at Jefferies with a buy, and Jefferies thinks that they are the company best positioned to capitalize on digital sports wagering.
All we need now is to get sports back and going, and we'll be able to start playing on DraftKings. I mean, I think that would be, again, I agree with you, Lee. It's really hard for me to buy a stock that hasn't really had, many public earnings, if any.
Right.
And second of all, if it doesn't even have a charting period for me to look at. So that's kind of one of my own internal rules for trading for myself right there. But this thing needs sports. And I don't know how much you read on the sports every day. It's looking harder and harder for baseball, football, basketball. They keep saying they're coming back, but not seeing it in stone. I think I heard this morning. What did I hear? The hockey NHL, the NHL is looking to potentially start on July 30th. I mean, so these dates aren't around the corner. DraftKings certainly needs these leagues to get back up and running to help them out a little bit.
Right. If you're just going from a charting perspective, wait till it breaks out.
Mm-hmm.
I would think. All right, let's take a look at Gilead in the biotech space. Had that big run up, has not been doing much. A lot of things are kind of range bound, Mike. It looks like when you just look at some of these. Anyway, they did have some good news. I would have thought they might have done a little bit better, but their remdesivir got approved for patients in India. That's a big market, at somewhere between $39 to $52 a dose over there. But I don't know. Does that tell you anything when that news is pretty good? They didn't really move. I don't know.
I mean, there's been so much play in this stock over the last couple of weeks, and I think we just looked at a chart. It had nothing to do with Gilead, but it was the same thing. It was a range bound stock. This one, the other one we looked at 2 seconds ago, just happened to be above the 50-day moving average.
Yeah, this
Tyson's Foods. This one's a little bit below the 50-day moving average. Unless, again, outside of technicals, if you think that they really have a cure or something like that, then there's a reason to play it. Otherwise, from a technical perspective, and that's what we're talking about here on charting them, that you talk about on charting the markets, and we're talking on Trader Talk today. There's no, what's the upside potential for me to make 4 points to lose 4 points to go to the bottom of the range?
Yeah,
Tough
exactly.
Tough trade without going with fundamentals.
All right. Apple. Nice looking chart. Let's just see what moving average recently has been helping it out. The 20-day looks like a thing traders could follow here for sure. There'll be news all day. They're having their Worldwide Developers Conference. They're doing it virtually for the first time ever. One of the interesting things, though, is they are saying that they are trying to wean their way away from Intel chips. They're going to use these ARM chips. So we'll take a look at Intel in a second. The other news on them is Cowen and Company raised their target from 335 to 400 on a fundamental basis. But the chart certainly looks nice, although you're flagging a little bit in here. We could just use it. You buy some, use the 20, buy more if it comes back and test the 20 and holds, or buy a little, and if it breaks out of this little minor resistance it has up here, buy some more too. I don't know. What do you think about Apple? Don't fight the tape, I think.
I think it's don't fight the tape. I mean, it was a weird day on Friday. I was actually off on Friday, and I said, "Hey, I hear the news. Apple's closing some stores in some of those southern states, which dragged the market down. But this stock really didn't seem to be affecting that.
Right.
It said something, and the news. If you look on Friday, all right, it was a strong volume day for Apple, but the stock really didn't give back much. Didn't even pull back in towards that 20-day even.
Yeah.
One of the questions that we got right before we started the show here, Lee, was on large cap tech and portfolio managers, positioning their portfolios towards the end, the window dressing towards at the end, obviously, of a crazy quarter. Uh, you know what? I heard what that person was saying on that question. I do see that because this stock has had unbelievable strength. The volume has been pretty solid for this stock, and it just keeps climbing to these new highs. Last week we hit an all-time high. So that little resistance you were talking about would be an all-time high for the stock,
Right.
to go through there. So this has been it's been a solid stock. It kills me when I hear people only talk Apple 24 hours a day, 7 days a week. But the stock does have some power out there, Lee. So technically speaking, it does look very nice.
Yeah, and also we had that. I think that was Dave in Iowa asked that question. Uh, I also just wanted to put a little more color on that too about money manager behavior coming here towards the end of the quarter. Uh, I think to the point that you just made, Mike, and also to what Dave was saying, according to the latest Bank of America poll of large money managers, uh, they, as we had been saying here on both Charting the Markets and Trader Talk, they had been kind of markedly underweight the market. Well, the latest survey that came out now for the first time in months, they are net overweight equities. So I think that kind of speaks to them trying to show some stocks in their portfolio by the end of the quarter. Um, so I think it does speak to the point our clients made there. Uh, and of course, you're probably wondering, does it mean anything when these money managers go from net underweight to net overweight? Uh, if they've been underweight for 3 months and then they go overweight? Well, yes, but there's not that many. It's happened 2 other times over the last 15 years. Um, Basically, it was a decent signal actually for the market. Um, Now the sample size again is only 2 other times, but both it was in May 14th, 2009 and November 2011 where we had this behavior, and it was a coin flip over the next couple of weeks to a month, but after 2 months on both occasions going out a year, the market was higher every time. So for what it's worth,
Always interesting facts, Lee. Always interesting.
yes, indeed. Nothing if not full of trivia. Speaking of trivia, uh, so the answer to my question, we had some good guesses. Tesla, Amazon. Actually, it is Wayfair, up 367% since March 11th. All right. See other stocks in the news here. Then we'll take a look at the indices. So let's look at Intel to see if they're getting hit with Apple's announcement there. Didn't react one way or the other, although we're back to our range bound theme here for sure. Right?
I think that's the bigger theme I'm taking away from today is we're seeing a lot of these, large cap stocks just really moving sideways after, these extreme bouts of volatility, right? So that kind of gives me more of a bigger picture of where this market's heading for the summer, right? It's going to be news dependent and it's just going to be kind of just dragging along. Again, here from a technical perspective, breaking down below the 50 or below the 20. Um, you're stuck dead in the middle of a range bound stock. You're at 50, call it $60. You got $4, $5 on the upside, and you got $3.50 on the downside. So
Yeah, I mean, nothing much going on there for sure.
nothing
Uh,
much.
yeah. All right. Let's see. Pretty much got them all, I think. We did have a downgrade in the semiconductor space. Clack. Actually, this is a better looking chart than some of the other ones. Uh, there's your support right at the 20. There is, now are we making a double top here? I don't know. It'd be a short-term double top, but the trend is still up. They, though, were downgraded to a hold from a buy at Stifel Nicholas.
Yeah, breaking out nice little pattern. That's what you want to see. Stocks making higher highs, following that uptrend, sitting on the 20, 20's trending up, 50's trending up. That's a better looking chart than we've been seeing over the last couple of charts. That's for sure.
Yeah, that's for sure. And, a lot of stocks might show this increase in volume on Friday. It was quadruple witching day. So, all right, that's pretty much for stocks in the news. Real quickly, we'll go over the major indices and S&P 500. I don't. Go ahead, Mike. What do you think?
Yeah, leave that to you. I mean, yeah, listen, Lee. I would tell it's nice that the S&P after that 1,800 point day we had a week and a half ago, has really kind of held tight after that big gap down that we had. You can see it there on that chart. Um, you know, Sitting there on the 20. All right, it makes me happy. It makes me happy that we didn't have a bigger sell-off. That little window that you just drew would be really nice for if you're on the bullish side of the market right there.
Yeah.
Again, that's a gap down from overnight close to the morning that we had that 1,800 point down day. So that's that gap right there. If you're a bull, you'd like us to start filling that, start getting above there, because it's now creating artificial resistance for the market a little bit there, Lee.
Yeah.
Um, downside, could we drop from 3,100 to your 50-day at 29? What's that? 29.58 or 29.88? My eyesight's going bad there, Lee.
Yeah.
But other than that, I think the market's moving into that a little bit of a range bound spot here. Because if you look at the highs and the lows of where we've been, we're right in that midpoint right now over the last.
Right. And you all know, if you've been attending over the last couple weeks, I did suggest that we would just go sideways for a while. And that does seem to be what's happening here. Let's take a look at the cues.
See a little more movement there.
A little more, yeah. Again, successful test of the 20-day. For real short-term traders, watch 241. But I mean, I think the 20-day is something you can watch here. This has been the strongest. Now, whether that's good or not, we've been talking about that. Is it good that this is leading in the sense of concentration in those bigger names? So are they just renting those stocks to get exposure, the institutions? Regardless of whether it's good or not, I mean, it's just got to
Really?
follow the chart on that one.
Yeah, I mean, and I think, listen, Lee, anything in this large cap tech sector, we keep getting, I'm looking at all the, the questions that we keep getting, and all those names that are coming up are these large cap tech stocks. But I hear what you're saying. The danger side is what would they rotate into after this, right?
Right.
If this was all window dressing, people are putting in these positions towards the end of the quarter, what are they going to rotate into? Because nobody's really given guidance, for what they see towards the end of the year from a fundamental perspective for earnings. No, I'm not seeing too many companies jumping up and down about offering guidance. you're entering a relatively weak earnings season as we start to get Q2 we already know is going to be bad, but Q3 is historically, not the best of the earnings seasons of the four. So I listen, I agree. If you're a bull on the market, not that I can continue to keep seeing it, but let's see this NASDAQ continue to keep making new highs, not stall up here. Because if this NASDAQ starts to stall, I would be a little more fearful for the market, because it has been these big cap stocks that have been holding everything up. No doubt.
Excellent. Let's take a look at the Russell. Take a look at the IWM. Yeah, it's got this weird kind of choppiness. This is certainly not the strongest of the indices, that's for sure. The other thing you might say is, number one, I do this as kind of a weird head and shoulders. Number two, though, you could also draw it like this. This would be a megaphone top too. Kind of looks like a megaphone, right? So a broadening top, a megaphone top, that isn't the strongest technical condition either. So, this one bears watching.
Yeah, listen, Lee, I think you're right on that. And I think, some people might call that, even though it's not a one candlestick formation, that little island up there where those three candles are kind of touching themselves by themselves, that right there. That's not, and we're not making any real attempt to kind of fill that gap. We tried to, and then we, from a closing basis, we weren't able to completely close that gap. That'll probably, 2 months from now, if we don't push through there, that'll become a problematic high. Right. So again, wouldn't expect these small caps to be driving the market right now. I mean, from a perspective of just where we are in the U.S. economy right now, this doesn't necessarily would make sense.
Right. All right. Let's take a look at sector action. And we'll do a quick screen, depending on what the sectors show. Let's just take a look at the main sectors. Kind of mixed. You got utilities, you've got tech, the big cap tech. That almost makes me feel that that's a little defensive. But then you've got XLY. Of course, if we take out Amazon, I'm sure that's not that strong. Materials, we looked at that. You've got a little bit of laggard in energy, healthcare. Financials haven't been doing much. The semis are kind of even. Let's just take a look at a couple of these. Let's see if utilities are getting back in gear at all.
Won't be a good sign for the market if they are.
Right, exactly. Nah, I mean, they're not doing much. So they're up today a little bit, but that's a kind of do nothing chart. Let's look at healthcare. Typical range bound. Not much going on there. See if the biotech, we've been watching the biotechs to see if they can break, and the XBI has. Nice move yesterday or Friday. So this has been an area of strength, right?
Nice move on Friday, pushed out above that range bound. You'd like to see the candle stay a little greener today. We opened higher, and now we're trending slightly lower. Now, again, it says that we're up on the day, call it unchanged on the day. But from a charting perspective, we'd love to see this thing even up, 10, 15 cents on the day. So where did it open? It opened at 109.34. We'd love to see it close somewhere above that area today. That'd be nice. Certainly don't want to see it pulling back in below that 106.94. But yeah, nice move on Friday. Nice move on Friday.
Let's take a look at the bigger biotechs. So this looks a little different. If you missed the breakout, watch it today. If it starts getting a tail again at that resistance, well, should now be support. Maybe you're getting a second chance to enter this, but only if that tail starts forming, because otherwise, that should hold, right? If this is going to go higher, it's got to hold that.
Right, and I would say that people, again, I know you talk about this all the time. People that play that breakout right there, um, even the bottom of Friday's candle, you wouldn't want to start to see this breakout break down below the top of that. The bottom, should I say, the bottom wick of that candle. That's probably be where my stop is on this trade. So
Yeah,
if I
exactly.
wanted to leg in either today at this now known as support spot, because it was once resistance. So if I were to buy into that spot, I'd have a tighter stop at the bottom of that candle from Friday, just to give myself some room to be wrong, because otherwise this thing will just drift right back into that, into the trading range it had been in, and most likely go towards the lower end of that trading range. But let's be positive. That breakout it's about, look, a 10-point move in there, right? 126 to 136. So
Yeah.
you've got a little bit of a price target, give or take about 146 on that breakout on Friday. So there's room for a good trade there. That just make sure the risk reward is in your favor. But there's definitely some room for you to have a good trade in that spot.
All right. Got a question on the gold miners. From what I've been hearing, there was a little bit of interest in that as gold shot up today, along with the miners because of the fear of these rising case counts. That's what I heard on gold. But really, it's range bound like everything else. So, I mean, we had a decent move up on gold today, but not enough to move it out of its range either. If you take a look at the future.
Yeah, but maybe taking a look a little bit at a more recent higher high, more recent.
Yeah.
More recent. I'm not saying it's a bullish move by any stretch of the imagination, but for the gold bulls out there, yeah, it's nice to see it making a little bit of a shorter term high today. That is for sure.
Yeah. All right. Let's just check some biotech names. See what Schwab has. There's good biotechs because they are ones that are given a little bit of a push in there. So let's go to our screener. And we'll just build a new screen in biotech, see what we get. So we'll just say above the 20-day moving average. So we'll do GIAC sectors and industry. We will do healthcare, but we will not do all of them. We will just do biotechnology. All right, so that should be biotech, I would think.
Should be the way you put it in there.
Yep, and then we got to do our regular ones here. We'll do last trade over 10. Do last trade greater than the 20-day moving average. A little volume in here. And let's put in A's and B's by Schwab to see what pops up. Total of 5. Well, that's good when we have a few minutes. All right. Well, looks like we like some of the big boys, that's for sure. All right.
Yep. We already looked at Gilead, so take a look at
Yeah,
Amgen or AbbVie.
yeah. Take a look at AbbVie. Losing a little upside momentum, but it's still,
Take a look at that chart on even on like the yearly basis.
yeah,
That stock's had a
yeah. Yeah, so I mean, it's still a positive chart. I mean, there's also, you can use the 20-day to set your risk or kind of right in there too. Finally broke out. It's not a great resistance level because it did trade through it a couple times, but certainly a bullish chart. Just depends on how much you want to risk. Okay, what else we got here? Let's take a look at Amgen. Well, Improving chart.
Improving chart with a huge resistance level up there
Yeah.
in those May levels. It's great that we're trading above the 50, we're trading above the 20. I don't have any problem with that. I just see a huge resistance line for us right there.
Yeah,
I
I
think
agree.
it make that chart go on the 2-year chart on that for 1 sec. Yeah. So yeah, that's a tough area. That's a tough area for that stock. From a risk reward perspective, I mean, I'd rather be, for my personal opinion, Lee, I'd rather be buying on the breakout on heavy volume above 243, maybe I say 244, and 10% above the 6-month average volume or something like that. That would be a better trade for me than trying to play this now and hoping that it'll push through that spot. But that's my opinion.
Well, it's a wonderful opinion because I agree with it. All
There
right.
you go.
Thanks, Mikey, for joining me today.
Thank you,
Our
Lee.
time is up. What is coming up next on Schwab Live Daily? Well, Spotlight on Futures is coming up next. My buddy Mike Zaremski will be joined by our special guest and frequent CNBC contributor Jeff Kilberg, who is founder and CEO of KKM Financial. A little bit later, I'll be back with Nina for our daily charting the market. So stay tuned, everybody. Thanks again, Mike.
Thank you, Lee.
Moving averages are technical indicators traders can use to track stock prices over time. The basic idea is that looking at how a stock's average price has changed over a specific number of days can show you if it has been trending higher, lower, or just moving sideways. You can also use moving averages to identify support and resistance levels. Two common moving average types are simple moving averages, SMAs, and exponential moving averages, EMAs. Each has its strengths and weaknesses. Which one you use for a given trade will depend on your strategy. A simple moving average is just what it sounds like, a straightforward calculation of a stock's average price, usually its closing price, over a set number of days. So, if you're looking at a 10-day moving average, you just add up the stock's last 10 closing prices and then divide that number by 10. And because this is a moving average, as each day passes, you add a new closing price as an old one drops off. As you might have noticed, SMA is a backward-looking indicator insofar as it gives equal weight to a 10-day old closing price as it does yesterday's closing price. As a result, a stock's SMA might not react as quickly to recent events. That's where exponential moving averages come in. EMAs attempt to correct for the lag time of an SMA by giving more weight to recent price moves than older ones. Unfortunately, because of the weighting, EMA is a more complex calculation, but most trading platforms do it automatically. So, how do you choose when to use an SMA or an EMA? That will depend on your strategy. For example, if your strategy is to buy a stock when the slope of its moving average starts to turn upward, potentially indicating a rising trend, or sell when the slope turns down, EMA might be a better choice because it favors more recent price moves and it can give you a quicker signal about a potential trend. One trade-off, though, is that traders who use EMAs to join trends are more prone to getting whipsawed. Whipsaws occur when a security starts moving in one direction, but then quickly reverses and moves briefly in the opposite direction. For trend-following traders, whipsaws can sometimes lead to a series of losing trades. Traders who use SMAs tend to experience fewer whipsaws, though they might be slower when it comes to spotting trends. You can also use moving averages to identify support and resistance levels. Technically, you can use either SMAs or EMAs for that, but many traders prefer SMAs, which generally make it a more effective indicator, as conventions like this can help shape trends if enough traders follow them. Both SMAs and EMAs can be useful tools for traders who like to follow trends. Which type you choose often comes down to personal preference. Try experimenting with both types and see which best fits your personal trading style. To learn more about technical indicators and how to use them, watch the other videos in this series and subscribe to our YouTube channel.
Okay. Bounced a trade idea off my firm. Same old lines. I mean, show me some technical indicators, proprietary research, something.
That's why I like Schwab. They help look out for your blind spots.
Come on, Johnny, you got this, buddy.
Speaking of blind spots.
It's time to trade up. Schwab helps you see the full picture with powerful intel and trading specialists who get it. Plus, get commission-free online stock, ETF, and options trades. Schwab, the better place for traders.
You know that tech stock we talked about? I picked up 500 shares.
You getting at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
The Relative Strength Index, or RSI, is a technical indicator measuring the strength and momentum behind a stock's recent price moves. It can give you a sense of when a stock might have become over or undervalued and possibly ripe for a reversal. RSI measures how much a stock has gained on its up days relative to how much it's lost on its down days over a default of 14 trading periods. On a price chart, a stock's RSI is plotted as a single line, oscillating within a fixed range between 0 and 100. Generally, when a stock has an RSI reading above 70, it's considered to be overbought and perhaps due for a retreat from recent highs. On the other hand, a reading below 30 suggests the stock may be oversold and could be ready to move higher. As you can see in this example, when the RSI moves near 70, the price tends to weaken afterward. And when the RSI comes down near 30, the price tends to rally. Now, it's important to note that these 70 and 30 readings work best when a stock is neutral, as shown here. However, when a stock is in an uptrend or a downtrend, these levels might not be as reliable because of the buying or selling driving this current trend. In a strong uptrend, for example, a stock's RSI might stay above 70 for longer than it would in neutral conditions, as traders' enthusiasm for the stock drives its price higher. When this happens, a drop from above 70 to below 70 could indicate that the stock is taking a breather on its long push higher. Conversely, when looking at oversold conditions within a strong uptrend, the RSI is unlikely to fall to this classically oversold level of 30. Notice how in this chart, temporary dips below the 50 line are followed by a continuation of the overall uptrend in price. Traders may want to allow the RSI to recapture its 50 line before joining the uptrend. As you might expect, this can also work for downtrends, when a stock's RSI might spend more time below 30 than it would in neutral conditions. In this case, you could use temporary peaks above the 50 line as a signal that the stock is taking a breather from its downtrend. Dropping back below its 50 level could indicate the downtrend is set to continue. Another way to use RSI is to look for divergences from price moves, indicating possible weakness in the current trend. It may also signal an impending reversal of the existing trend. Here we see that the RSI dips as the stock hits a low. Notice how this first dip in the RSI is much lower than the second one, despite the stock's price actually hitting a lower low. A technical trader might look at this lower low in the stock price and see a continuation of the downtrend. However, the divergence between the sharply falling stock price and the modest dip in the RSI could signal that the downtrend is weakened and higher prices may be in the offing. The RSI can be a helpful technical indicator, but it's important to understand its movements in all conditions. To learn more about technical analysis and its practical uses, watch more videos in this series and subscribe to our YouTube channel.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders and commission-free online trades.
I'll take care of this.
Are you getting complete price transparency? Expect more from your firm. Schwab, the better place for traders.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
It's time to trade up to Schwab, where you get price improvement on 96% of orders. Schwab, the better place for traders.
Hello, and welcome to the Quick Start video for the All-in-One Trade Tool, available in Schwab's Street Smart Edge platform. The All-in-One Trade Tool is the most dynamic, advanced trading tool in the Street Smart family of software, offering unprecedented flexibility, particularly around option trading workflow. Open the All-in-One Trade Tool by going to Launch Tools and selecting the All-in-One Trade Tool. Like most tools in Street Smart Edge, the All-in-One Trade Tool has a tabbed interface where you can customize the contents of each tab, making it easier to trade your favorite strategies. Depending on the strategy you select, the trade ticket automatically updates along with the relevant quotes data or option chains. If you often trade, for instance, vertical call spreads, you can create a vertical call spread tab rather than having to set the options tab up for the vertical call spreads each time. If you're an equities-only trader, the default stock ETF tab will be your place to be. It includes NBBO, market depth, and time and sales data. If you want to add a leg, you can quickly turn a stock or option order into a multi-leg order using the Add a Leg button, or remove a leg by clicking the minus button for the leg you wish to remove. As a benefit, when you make changes to the first leg of the strategy, the other legs will be updated to stay within that strategy. The All-in-One Trade Tool is loaded with data to help you with decisions. Let's start at the top with the title bar and level 1 data. The title bar will display the last trade price, change direction, and change from the previous close, as well as the full name of the company or index and exchange. Right below the title bar is the level 1 data, as well as the order status and position indicators, which show whether our account has open orders or positions in the selected symbol. Customize your level 1 data by clicking on the gear icon. In addition to the standards, bid, ask, high, low, open, close, and volume, you can also select data such as 52-week high or low, put-call ratios, and implied volatility rank and percentile, and many more. Other data available in the All-in-One Trade tool includes the Trade and Probability Calculator and Top Movers. The Trade and Probability Calculator shows a visual representation of the risk-reward of an options strategy to help you quickly assess option trade risk based on the price of the underlying on certain dates, using the Black-Scholes option pricing model. It also plots the theoretical probability of the underlying symbol at any point in time up to the expiration date. The top movers will display the top volume, top gainers, and top decliners for a single underlying symbol. This concludes this quick start guide for the all-in-one trade tool for Street Smart Edge. Please check out the Learning Center and the online help manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab, and have a great day.
You could think getting commission-free trades is as good as it gets, but you know better. At Schwab, free means more. You get commission-free online trades, plus quality trade executions on our powerful platform. All from the only firm that offers a satisfaction guarantee. Expect more from your firm. Trade up to Schwab, the better place for traders.
At any point in time, stock prices are trending upward, trending downward, or trading in a range. And really, that's it. As a trader, it may be useful to know which of these scenarios you're seeing. Technical analysis uses charts to track price and volume ranges over various time frames in an effort to gauge which way the stock may move. Identifying these trends and price action can help you decide when to enter a new trade or exit an existing position. For the technician, price is king. Technical analysis can help you take the emotion out of trading because it assumes that all of the news, the earnings potential, and consumer sentiment are already baked into the existing price. This means that you trade based on what you see happening, not what you believe should be happening. Because psychological factors can also drive markets and are often predictable, technical analysis uses charts to offer a picture of how markets act when a stock reaches certain price levels. By watching for changes in price action and trading volume, you can gain insight into what other traders are doing, and that can help you make better decisions with your trades. So let's look at an example. If a stock has a history of retreating to $50 per share and moving higher from there, you could enter your trade near the supporting price of $50 and look to sell once it moves higher. Keep in mind, you shouldn't rely on past performance to assure success no matter which indicator you're following. In this example, you would want to set your stop order just below this $50 level to help limit losses in case the stock were to reverse and fall through our support level. Falling through this $50 level of support would be a clear departure from what the stock had been doing. It can indicate a shift in sentiment, meaning many traders might have lost interest in this stock. And once that happens, the price could continue lower to its next level of support, making your stop order very important. And remember that there's no guarantee that your stop order will be filled at or even near your stop price because once it triggers, you're entering a market order. Keep in mind that technical analysis is not a guarantee of success. It works best when you use a combination of tools and indicators to get a full picture of what the market is doing.
So Schwab taught me about four-legged option strategies. I'm gonna go with an iron butterfly spread on that fintech stock.
Nice. I just tried an iron condor.
Oh, only spread I've been introduced to is this onion chive.
It's It's time to trade up to Schwab, the firm invested in helping you become a better trader. Get commission-free online stock, ETF, and options trades. Expect more from your firm. Schwab, the better place for traders.
Hello and welcome to the Quick Start video for the Chart tool, available on Schwab's StreetSmart Edge platform. StreetSmart Edge has advanced charting features that give you the freedom to customize your charting experience to your precise specifications. Features available include more than 30 customizable studies, the ability to draw trend, support, and resistance lines and symbol overlays, as well as chart types including mountain, bar, line, and candlestick, and much more. First, let's open a new chart by clicking on the Launch Tools, and then under the section called Research and Analyze, click on Chart. The heart of the chart window is the price chart itself. It displays the main symbols chart with your type and style specifications. The Chart Settings panel is accessible by either clicking on the arrow to open the drawer and view all the setting choices, or you can right-click on the chart and select settings from there. Here you can set type and style of chart, add overlays, draw trend lines, and other objects. You can change the colors and more from the Settings panel. You can choose from 3 views of the Chart Settings drawer: Fully Open, Icons Only, or the default, which is closed. Across the top of the chart are chart keys, which represent the symbol overlays, studies, or drawn objects you have added to the chart from the Chart Settings panel. To hide or show all overlays, drawn objects, and studies, click Hide in the upper left corner of the chart. Click Show to display those studies again. You have several options when it comes to chart history control. You can use the sliders. Look to the timeline. There you can see the left and right slider handles, which you can drag to the date or time to which you want to isolate the chart data shown. You can also use date selection, where you can just type or choose from the calendar the start and end dates for which you want to isolate chart data. Click Go or press Enter to apply the date selection. You can use the quick jumps, where time frames and a range of unit sizes are listed. The choices depend on the type of chart you are displaying. Click any of those time periods to display only that period on the chart. And lastly, you can just type the number of days, years, or minutes you wish to view and click Go or press Enter. Trading is available from the chart. The chart trade ticket is available for stocks and ETFs and allows the same actions, venues, order types, timings, special conditions, and brackets as found in the all-in-one trade tool. The versatile tab functionality is also available here in the chart. You can customize and display many tabs in each chart. You can have them all synced to show the same symbol, set up your favorite time frames, and rename the tabs any way you wish. This concludes the Quick Start Guide for the Chart tool on Schwab's StreetSmart Edge. Please check out the Learning Center and the Online Help Manual, both of which are located under the Help menu. Additionally, you can visit the calendar on schwab.com/live for a schedule of upcoming live platform videos. Thank you for choosing Charles Schwab and have a great day.
At its core, fundamental analysis answers 2 questions. How's the business doing, and what's that business worth? In other words, are the revenue and earnings growth improving, stable, or deteriorating, and what's a reasonable price to pay for that company's stock? If you've identified certain sectors and industries to invest in,